Hello, everyone. Thanks for joining and welcome back. Our guest today is John Rubino. He is the founder and editor behind Rubino.substack.com. He has over 20,000 subscribers, and we are super, super grateful to have you down. Welcome, John.
Hey, Ivan, good to talk to you again.
Yeah, it's great to talk to you, have you back down to speak to the whole silver, gold, and investing community. First question I want to get to you, is what are your thoughts on silver? The past week has been super exciting in the precious metals market. The excitement is bubbling back up. Is this a breakout, a fake out? What do you think?
Well, first and foremost, congratulations to your audience. You've got a lot of suddenly rich people out there, I think, who've been listening to you for a while and who are glad that they listened. And my second thought is that it's about time. This was a really long wait for silver because gold kept us waiting for a while too, but it's been gradually going up. We had that, excuse me, about a 4 year long stretch when it bounced off of $2,000 an ounce and bounced off it again and again. And it kept hitting resistance there. And it finally broke through, and now it's in the 3,000s. So overall, even though that was a long wait to break through 2,000, gold has done really well for the stackers out there because instead of bouncing off of 3,000 for another 3 or 4 years, it just broke right through. And who knows what the limit is now. Now, as for silver, um, this is kind of an elongated version of a typical precious metals bull market. Usually it's gold that moves first because gold is the big name in safe haven assets. And when somebody gets scared about what's happening in the world, they always go to gold first, or they
Yeah.
usually go to gold first. And so gold moves first. And then the gold to silver ratio starts to really widen out. And you get up into the 70s and 80s. In other words, it'll take 70 or 80 ounces of silver to buy an ounce of gold. And then eventually, people notice silver, realize how cheap it is compared to gold, and start buying it. And then for the last few years of the precious metals bull market, silver outperforms gold by several hundred percentage points. And this feels like another one of those precious metals bull markets. We had one in the 70s, one in the 2000s, where it played out pretty much the way I just described. And now, after a long wait of gold gradually rising and silver just languishing, silver is starting to outperform gold. And we did have a 100 or 105 gold to silver ratio at one point in the last few weeks, which is a screaming silver buy signal. So if past is prologue, then we should be preparing for some really wild times in silver. No guarantees about anything, but the last two times we were here, what happened in the next few years was phenomenal if you owned a bunch of silver. So, here's hoping. And one of the nice things about this current situation is that the silver miners haven't had their big runs yet. Normally, precious metals miners are that they call them leveraged plays
Right.
to the metal. And that hasn't completely happened yet with silver, where the miners are dramatically outperforming the metal. So there's still some silver miners that are relative bargains and that might still be, five baggers or 10 baggers when silver becomes a three bagger. And, we still might have that part of the process to play out. And if so, there's still a chance to make some serious money here.
What are your thoughts, John, about the big beautiful bill? Like I know Elon Musk has came out and he's been criticizing Trump on it. They're trying to get rid of the debt level ceiling, the debt ceiling, so that way they can just spend unlimited money and have no actual cap on it, and there'll be no actual ceiling. What are your whole thoughts on it?
Well, first of all, the whole Doge thing was very exciting. Doge did a lot of good things. They uncovered how the government and the political class were basically running a money laundering scheme.
Yeah.
Most of these NGOs but basically every other entity that's out there was in some way or another laundering taxpayer money and enriching themselves at the expense of everybody else. So that's exposed, and that was a really good thing. But there was never a chance of Doge coming up with $2 trillion a year in spending cuts. That's, because the government spending is taken up by interest, which we can't control other than by cutting interest rates.
Right.
The military, which nobody on either side of the aisle wants to scale back dramatically because they love being able to have all these weapons built in congressional districts where everybody makes money. They love that. And they love having the most powerful military in the world. So the military can't be cut. Social Security and Medicaid are next. And there's not a chance in the world of baby boomers taking a big cut in their benefits. That's my generation. So I speak with authority here. We would never let that happen. There's no way you cut baby boomers' entitlements. So that leaves basically, school lunches and a few other things like that that nobody wants to cut either because it's just cruel and it doesn't save much money. So there was no
Right.
way that we were ever going to take a big chunk out of government spending. So Doge succeeded as well as we could have ever really expected it to succeed, but it created unrealistic expectations. And so a lot of people see it as a failure, but And so the big beautiful bill is basically what you should expect from Republicans because they don't want to cut spending either. The government spending and deficits have gone up pretty much under Republican administrations as under Democrat administrations since the days of Ronald Reagan.
Right.
It's you got to go back 40 or 50 years before anybody actually cut any government spending in any legitimate way. And even in the Clinton years, in the 1990s, we actually had surpluses for a little while, but it was a scam, which we probably don't have time to get into, but that was something that wasn't what it looked like it was. So we've never really had governments controlling their spending. And that's a very important thing to understand because there is never a chance for governments to control their spending in a fiat currency environment. If you give them the ability to create money out of thin air and to borrow as much as they need to do whatever they say they need, they're always going to do that. And as long as we're running fiat currency systems around the world, we're going to increase government spending. We're going to increase debt. The interest costs on the debt will continue to go up until the system blows up. And it will only be when the markets take that power away from governments by just giving up on these fiat currencies that we actually get a chance to set up a system where governments live within their means and debt is manageable. Those days for this system are past.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metal storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
What's the end game for this, John? Like you just mentioned that with the government living within their means and no going over budgets and like those days are past. But what happens to this system when it implodes? Or do they like how long can you kick the can down the road for all these increases like 2.5 trillion here and then what's the next one going to look like? Yeah, how long can you kick the can down the road?
Well, I'm not a very good person to ask that question of because I've been wrong about the timing quite a bit in the last 10 or 15 years. Seemed like it was ending before this.
Right,
But I will say that we seem to have entered the death spiral part of this process because we got a bout of inflation in 2023, which scared everybody around the world into raising interest rates to try to combat inflation.
right.
Now, those higher interest rates are now causing the interest cost of everybody's debt to spike. So all the big governments of the world that have been borrowing with impunity because they were paying such low interest rates have seen their interest rates go up, and now their interest costs have gone parabolic. With the US, we went from 3 or 4 hundred billion dollars a year in interest expense on our debt to a trillion 5 in the blink of an eye. And so that money, of course, that interest expense has to be borrowed, right? Because
Right.
we're already in deficit, which means every succeeding year's deficit is going to be bigger and bigger. Interest costs are going to be more and more onerous, and so on, until the system does just blow up. And by blowing up, I mean something like a crack up boom, where people just give up on the currency. They understand that it's the government's policy to inflate away the currency to make it worth less year after year after year, and they front run it. Everybody decides to convert their dollars, for instance, into real things that governments can't create more of. So we're out there buying farmland and gold and silver and rental houses and pretty much whatever governments can't just make up out of thin air,
Right.
we convert our capital into. That sends the price of those things through the roof, which manifests as inflation, which is to say the value of the currency relative to those things plunges in uh, an uncontrollable way. And that's the end of the process. At some point, then governments have to either admit that they've screwed up the currency to the point where it's irredeemable, or watch it just evaporate completely. And there are, examples of this happening throughout history.
Yeah.
Google list of hyperinflations, and you get a whole page of, brand name countries that you've heard of who,
Yeah.
at one time or another in the not too distant past, just ruined their currencies. So the difference this time around is that we're doing it globally. It's not one country borrowing too much money, printing too much currency, and crashing the value of their currency in the context of a global gold standard.
Right.
It's everybody on a fiat currency standard doing the same thing at once. That's what makes this such a fascinating time because the numbers are so much bigger. And there's no real system to step in and fix an individual country because everybody else has the same problems. So I think there's a very good chance that where in the past gold and silver went up dramatically, thousands of percent
Right.
versus the local currency. I think there's a chance of that happening again, but on a global scale, where basically every currency starts to evaporate, which is to say, gold starts to go parabolic and starts to point towards infinity in a lot of different countries at the same time. So
Right.
fascinating times.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Well, John, there's a lot of new silver and gold members on this channel, and probably just the whole precious metal space in general. And you have so many new people that are younger who are getting into assets like silver and gold who want to protect their wealth. What would be your if you were to look back at your life and you wanted that one piece of advice, what would be your advice to the common man or the youth right now?
Well, it would be to pay attention to what your government's doing. And if they are profligate and if they're careless and if they're spending too much and borrowing too much, bet against them. It's a
Right.
very simple thing to do. Just try to hold as little of the government's currency as possible, and also financial assets that depend on that currency for their value, and try to own real things to the greatest extent possible to protect yourself. And then with the money that's left over, see, there's this thing called credit super cycles that you really need to understand because when governments start to borrow too much money and start to encourage their citizens to borrow money and credit is just being created like crazy out there, that's a really bad thing. But it also tends to inflate asset prices really aggressively. So while you're protecting yourself against a declining currency value, you might want to speculate on the assets because remember, well, in credit super cycles, you get sequential bubbles.
Okay.
Some asset becomes a bubble asset that everybody's excited about. So identify the bubble, get in early, ride it for a while, and then bail. In fact, start shorting the bubble assets after they get really crazy. And you can play these cycles. Like if this was 1975 and we were talking to somebody who's just getting to the market, you would have the tech stock bubble to ride and then short, and then the housing bubble to ride and then short, or no, to the junk bond bubble, then the
Right.
housing bubble to ride and then short. And now you'd have the AI bubble to short, or probably now, yeah, short, but you could have ridden it for quite a ways. And then Bitcoin somewhere along the way. You would have seen that emerge as something that looks kind of bubbly, like the dot
Right.
coms or something. Jump on that and ride it. So anyhow, this is useless information for somebody right now. But if we were back in 1970, it would be,
Fantastic.
it would make you the richest person in the world a
Yeah.
thousand times over if you just followed that advice.
Yeah. Ride the
So
bubble and short it.
yep, ride it and short it because the shorting it is actually the way you make the most money because that happens fastest. Because the tech stock bubble took all of the 1990s to blow up, and it crashed by between 2000 and 2020 and 2002, yeah.
Yeah.
So you had basically 2 years in which to short everything back down to zero. So anyhow, that is all hindsight. That's all what I wish I had done. But now we're at the point where we're at the end of another big bubble. And yes, you could definitely short the NASDAQ right now, and you could probably do fine. But you also absolutely want to be protecting yourself from the world's currencies
Right.
starting to decline in an uncontrollable way. And that is real assets. It's difficult for a lot of people to do because that means you're not buying Nvidia, even though Nvidia is going straight up and everything. But
Right. Right.
yeah, that's where all the money was made. But if you can, of course, now, we're far enough into the gold bull market that that's actually the best performing asset of the last 3 years. That's better than stocks and better than bonds. So it's easier now. But real assets will tend to hold up very well in what's coming. And that's how you want to protect yourself going forward. So, the mining stocks that still haven't really taken off, even though gold has
Yeah.
had this great run, the best quality gold miners are universally three baggers to 10 baggers out there. More so for the silver miners, because first
Right.
of all, there's fewer of them. There just aren't that many good silver miners out there. And they haven't had huge runs yet. So, you get kind of tech stock slash NVIDIA action from the best chosen precious metal stocks going forward. And that's a lot of fun. That's life-changing money.
Yeah.
But the big thing you want to be doing is protection. And
Yeah.
that's physical. You want to own physical gold and silver. You want to own actual productive land. And you can't own oil wells very easily unless you're a multi-millionaire. But you want to own super high quality energy stocks. And those things are your protection. So,
Yeah.
in my Substack, I've got kind of a mix. I've got some really speculative little like gold and silver explorers, and then a lot
Nice.
of, uranium stocks and copper stocks and oil drillers. And those are the things that ought to protect us going forward. And they'll make money, they'll go up, but they won't go to zero under any circumstances. So the risk reward calculus for high quality assets that have a basis in the physical world, even if they're
Right.
not something you can hold in your hand, that's just a really nice place to be over, say, the next 5 years.
Absolutely. John, it's such a huge pleasure having you come down. Everyone watching this, I highly recommend you. Please go check out rubino.substack.com. I'm going to put the link right in the beginning of the description. So if everyone wanted to click it, you can see it right there on the front page of the video. But John, it's such a huge pleasure when you come speak to everyone because you break it down in such a clear format that it makes everyone understand like really easily. So we really appreciate having you down. And as the market develops, would really love to have you back on.
That'd be great, Ivan. Talk to you
Talk
soon.
talk to you soon.